Hi there, this is Chris from MoneyHub, and this video looks at how do credit cards work. We've put this guide together, which I've linked to down below in the video, to make it clear exactly the risks that you face with getting a credit card. Many people in New Zealand have them, but unfortunately, a lot of those people can't repay them every month, and that means they're paying a lot of interest, so a lot of extra fees to spend their own money. We're not a huge fan of credit cards. Certainly, there are some credit cards which are very useful for people who can pay them off, but overall, there is a lot of risk with them. So this guide's going to be just me going through our points and just talking around some of the interesting things that you should probably be aware of should you be looking to get a credit card. So first of all, some must-know facts. So what is a credit card? So a credit card is simply a payment card. It's like an EFTPOS card, or it's like a debit card that lets you spend money. But the thing is, you don't pay for it then, you pay for it the month after. So it's not like a debit card where the money comes out of your account instantly. You've got between usually 44 days and up to 55 interest-free days to make the balance payment when it's all due at the following month. And who can get a credit card? Well, that's per New Zealand law, that's going to be anyone who's 18 years or over. And credit cards aren't a right for everybody because now with tougher legislation around lending, because of course credit cards fall under that kind of lending category or lending legislation, you need to have a strong kind of credit profile. So you need to have some sort of income or salary or some sort of financial assets like money in the bank. This is not, well known the way that banks determine this now. We get lots of emails asking us, can I apply for this? Or do you think I'll be approved? We don't know the answer because we don't work with the banks, and the banks, will never share that information anyway. But it's certainly worth knowing that, just because you turn 18, it's not a rite of passage to get a credit card, and it's certainly not a guarantee that you'd be approved for one. Now, what's a balance transfer? This is something which kind of goes along side by side with credit cards because of high interest costs, which I'll get to later. A balance transfer means if you can't pay off your credit card, then you're going to be charged interest, and that can be as high as about 27% per year, which is a lot of money. So say you've spent $1,000 and you can't pay that, and the interest rate is 27%. Then per year, if you don't pay anything off, alongside sort of normally you'll make a minimum payment, but per month. But I mean, looking at it sort of overall, that $1,000 is going to cost $270 per year in interest cost if it's 27%, because that's 27% of 1,000, and then you're going to have to pay that as well as the $1,000 that you actually owe on the card. Of course, these interest rates, the interest charges add up month on month, so you don't get charged the full, annual interest all in one month. But it's really, really difficult, and this is why balance transfer offers, there'll be offers from other credit cards, usually the likes of Westpac, BNZ, ANZ. They do vary from time to time, but these banks will say, well, if you have a card and it's got a large balance on it, or any balance on it, it has to be normally over $100 or $200, then you can transfer it to our card, and then you'll pay less interest for a fixed period of time. So that can usually be, 6 months or 2 years. It just depends on the offer. But balance transfers, unfortunately, go side by side with credit cards for many people, just because there's a lack of ability to pay off the balance. People get sick of seeing the interest rates just charge up and charge up. It's very awful. Like, you get a statement and it says, right, your balance is, say, $1,000, and then this month we've charged you, $25 of interest or something like that, or $20 of interest. And then possibly you've made more payments. And so they'll get added on, and then it'll obviously, you deduct what you've paid. But this is why credit cards can be a total trap. And we're very, very sort of conservative on them. And we don't think many people should have them. Actually, our sort of must-go question is that people ask is like, what credit card is the best credit card? And for many people, it's actually no credit card at all. And that's just because of these interest costs. So the second related thing to low interest rates on credit cards is these 0% interest rate offers. So sometimes you'll see from the likes of Q Mastercard and Gem Visa that, oh, we're going to give you 0% interest, and that's going to be for 6 months, or maybe it's a 12-month deal, and then there'll be no repayments. And basically what that means is you'll go down, and it's usually, and I don't want to name names, but it's usually big stores, and there'll be, you can get this sofa, you can get this TV, and it'll be 0% interest rate and no repayments for 12 months. And that sounds great. You spend, $2,000 kitting out your lounge, and then you don't have to pay for anything for 12 months. That's kind of the idea of the offer. But the problem is that you are supposed to make the payments over that 12 months to avoid the problem of high interest in the end of it all. So what happens is that people's 12 months finish and they still owe $2,000, and suddenly it costs like 25.99% or 20% per annum or something like that, plus they have to make the repayments. So the only way to really get away with these sort of comfortable deals would be to take, and this isn't financial advice, it's just kind of what the best approach would be to buy, what you need on these cheap deals or on these interest-free, no repayment deals, and then divide what you owe by the number of months that the interest-free deal is at. So if it's 6 months or 12 months, just divide the amount that you've spent by, 6 or 12 months, and then you'll get a monthly amount that you have to repay, and that's what you'll need to transfer to the card company to avoid this whole big drama at the end where you get a whole bunch of debt and it's very high interest. So too many people in New Zealand have these cards, and this isn't me being judgy. This is just like a fact. They've got balances of $5,000 to $10,000. That seems to be the usual spot from what the information we've received from users and people just, contacting us and all sorts of things. And basically, because those interest rates are around 25%, and say they owe $8,000, then they're paying $2,000 per year of interest, plus they've got the $8,000 to repay. And of course, $2,000 of interest costs, you need to be earning, $3,000 of actual money, after tax to be paying for those $2,000. Plus, all the repayments, which are really hard to make because people, they're just, they have not got that kind of money to just put onto a card like these things. It's very easy to spend it, but it's very hard to pay it back. So please be very, very cautious of these 0% offers or these no repayment offers, because they are designed to be useful. But at the same time, cynically, I would say there's so much expense at the tail end of it if you can't repay it, and many people can't. So that's something to be aware of. Now, with credit cards, also airline credit card rewards and things like that come up into a discussion quite often. So basically, if you are looking to earn in New Zealand air points or something similar, then there's plenty of credit cards which let you do that. And we've got lots of guides to those, which are linked in this guide as well. And what you do if you spend, say, $100, then some cards will give you 1 air point. If you spend $110, then some cards will give you 1 air point. One card, if you spend $59, it'll give you 1 air point. So it's worth noting that, if you are, able to get your payments made every month so that you're not paying any interest, then certainly these cards can be quite valuable. Where they're not valuable is where you can't repay the balances, and then any rewards that you earn, any kind of free flights or any air points dollars, what you pay in interest is going to be much more than the value of any kind of flight. So just be aware that, it's certainly very useful and they're popular. But they're not without their risks. And it's a similar story for cashback credit cards. So some cashback credit cards give you around 1% or 1.33% for every dollar that you spend. And that's quite good. It just comes out of it just comes off your statement the following month, or maybe every 6 months or 12 months. So if you spend $10,000 in 1 year on the credit card and it has a 1% cashback, then you're going to earn $100. And that's really, really quite sort of useful. Just it's money for nothing, really. Of course, these cards usually have an annual fee, so it's something to be aware of. Like, what is the annual fee, and will you spend enough to generate enough cashback to even pay it? But usually, anyone spending $1,000 to $2,000 a month on a credit card will pay the annual fee with whatever rewards or cashback that they're earning. Now, some rules about credit cards, just to make it kind of clear and simple. As I previously said, if you don't pay them off, then they're incredibly expensive. So just be aware of that a $4,000, then you're going to spend $800 per year on interest. And that's, with a 20% interest rate. Many cards are more than that. And many balances are much larger than $4,000 of what people owe. So it is a huge problem in New Zealand. There's plenty of research on, how much money we spend. I've published an article and stuff in 2021 just about how much is being spent, and it is insane. It's about $1.5 million per day of interest payments going out on credit cards to banks. And it's just such a huge amount of money that is just completely unacceptable. And no one does anything to fix that. There's no government change. There's no initiative from the banks. So people just pay these credit card interest costs like forever and a day. And it's a big waste of money. So the minimum, and the second point here is if you don't pay the minimum payment, you're going to actually end up paying more fees. So every credit card has a minimum payment, and we've got some guidance on that within this guide as well. If you don't pay that, usually it's going to be between 2 and 5% of your balance. If you don't pay that, then you'll get charged a late fee, and then there's more interest on top of that fee as well. It's a whole big expense. So that's why you need to make the minimum payments, whatever your situation is. That's the only way to kind of avoid more problems with a credit card. Credit cards can't be paid off with other credit cards, so you can do it. So you can do the balance transfer. Sure, that's a specialist kind of product or service, but you can't just pay the balance down off one credit card with another one. That's not how things work. So you have to pay it off with money from your bank account. You can do that over the phone with your bank. You can do that, through the branch. You can do that telebanking. You can do it online, but just be aware that you won't be able to pay it off with any other credit card. And really, our view is quite simple here. Please don't charge things to credit card that you can't afford to pay. That really sounds obvious and it sounds simple, but it's a huge problem when people rack up a whole bunch of credit card debt because there's just no way, to pay it off in the short term, and it just drags and charges huge amounts of interest, and it's just terrible. And we also say you can move your credit card debt if you need to. So that's what I was saying around the balance transfer. Some people ask about debt consolidation loans. Our view is quite simple there. We don't think like new debt or more debt is a way to solve existing debt, and we think people should just consider the balance transfer and look at following it up properly by paying off the debt rather than new loans, new loan application fees, new interest rates, new people to pay. It just gets complicated, it gets expensive, and there's so much money in debt, which is the problem. There's so much money in it for the lenders and for the banks, and the problem is it's just so lucrative that, that you can be trapped in it forever because it's designed to be that way. So just be just be incredibly careful, knowing that you've got very little space to be able to move should you not be able to make the balance payments in full. You're just going to be charged a whole bunch of interest, and it's going to be an absolute waste of money. Now, I've sort of further touched on the balance transfers, and I'm just saying there, if you do that, like you must pay it off. So I just previously said that you have to pay it off within the time limit. And choose credit cards like a winner. Basically, that means is that like please don't choose a credit card that's not like suitable for you. There's no point having a high fee card or high interest card if you can't pay it, and or if you don't use it for the high fee one. Just look at something that's completely simple and a starting one. If you're desperate to have one, just look at for a free one perhaps, or something which is like totally low interest, low minimum credit limit. So I mean by that is if it has a maximum spend of say $500 or $1,000, then that's quite good, because that keeps you in sort of safety, so that if you do overspend that, then at least it's not $5,000 or $8,000 or $10,000, because I've seen that way too many times and it's terrible. So we also say please avoid being a slave to rewards and perks, because they're not worth the cost. Many people just think, oh well, I'll spend some more money because I'll get some more points on it. But the reality is you're spending maybe $98 to get $2 worth of value, and there's never any value in that. So just be aware that no one ever wins in the long run from doing that, and anyone who manages a credit card well just spends the money that they'd otherwise spend and uses their card to pay for it, and then they earn the points, but they never go out shopping just to earn rewards or points or any type of cashback or anything like that. Please resist from getting too many credit cards. And once again, I would say the best credit card sort of number to have in your wallet is pretty much 0 or 1, because the more that you have, the more temptation you have to use them, and that's just gets complicated and it gets pricey when people need to be repaid, i.e. the credit card companies, and to manage that with your wages, it's just a bit of a hassle. So less is best here, and one credit card to start off is pretty much what we'd suggest is like the maximum should you be considering doing that. But of course that isn't financial advice, it's just kind of common sense. Now what we do suggest people do is if they're not used to credit card statements or basically using one, then please go through the statement every month. And it's really important that you do, because many people don't, and they have no idea where the money's going. They just know that they've spent say $2,000 and they don't know where that's going, or where that's gone, or what they actually got for that. So we suggest people download the statement. It'll come to you from your bank, or it'll come to you in a PDF like from email, and just go through it line by line, kind of relive it all, see what you spent, and basically be ready to face that. Because the problem is if you don't, then you can't really control your finances as well. So just see where you spent, what you didn't think was good value, what you did think was good value, and then you can kind of shape your sort of like decisions going forward. So that's something that we really suggest looking at. And then please, sort of 2 final points here: don't withdraw cash on your credit card. It's very easy to stick your card into a machine if you don't have much in your bank account and just take out $200, $300, but you're paying interest on that from day one, and that's usually at a slightly higher interest rate than your standard purchase rate. So if your standard purchase rate's maybe 20.95%, then your cash withdrawal interest rate will be about 22.95. Now that's for like one card, that's for one card example, but I'm just saying there's no, it's a very expensive way to spend your own money. And, because you're charged from the minute that you do that, then if you take out, $500 and it takes you 6 months to repay that, and the interest rate's, let's say 25%, then you've spent, sort of $50 or $60 on interest payments just to take out that $500. So be very careful with that. And it's really like an emergency only. And really like it's a super emergency. It's not even like an emergency expense. It's just something out of the ordinary, completely out of the ordinary, where you'd need cash and you have no other cards. But please, otherwise, just be very wary of that, because that's another trap that people get into. And then finally, please don't get credit cards if you're going to abuse them. And that just means, buying stuff that that you probably can't afford and that you have no real plan of paying back. It happens every day, multiple times an hour in New Zealand that people are doing this, probably even multiple times a minute. Just avoid it, because no one is going to win from that in the long run. It's just expensive debt, and it's just such a waste of money. So that's our summary there, and I'm sorry if my tone or my sort of discussion points on this is quite strong, but this is really much a personal sort of passion of mine to minimize people getting credit cards. It's absolutely fine if you have the means to pay them, and you're if you're fine and responsible, and can make the repayments in full, then you can enjoy the benefits of them. But for what the data that we're seeing right now is about 1/3 of Kiwis can't, and that's just sort of sucking money away from what we'd actually like to spend it on, and something that's nice and rewarding, to just profits for the bank. So thanks very much for watching. We want to keep our resources as comprehensive and up to date as we possibly can. So if you do have any questions that you'd like to ask, or if you have any comments, please leave them below in the comments section, or you can send us an email, because we're very responsive to both. So thank you very much for watching, and we wish you the best of luck.